What's up everyone, it's Scotty with Money Investing. In this video we are going to break down Palantir's earnings. They did report earnings for the second quarter of fiscal year 2023. So we're going to break down exactly what the company reported in terms of growth, in terms of earnings, in terms of cash, in terms of free cash flow. Everything's going to be discussed. As always, if you enjoy this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. Like I said, the first week of the month is the best time to join. You get access to all the alerts, all the benefits, all the members-only videos, and of course, all the intrinsic value spreadsheets and a lot of other educational content as well. So links are going to be down below. So this right here was, again, Palantir's price action after hours. It was a little bit more volatile. So if you go over to the 30-minute chart, you'll notice that we did actually drop after the report was released. So let's go over to the 5-minute chart. So we did drop a little bit over, so from $18 all the way down to $15.72, so down 13%. But of course, we recovered all that back and pushed higher another 10% from low 16s to pretty much closing in at just over $18.66. So pretty much from where we closed, Palantir was up about 3.2, close to 4% after hours, after the numbers were released. So Palantir did ended up beating expectations. So actually, you know what? It was slightly missed, right? So slightly missed because the number was like 5.1 cent per share, and they reported 5 cents per share. So maybe like a 0.001 cent miss. And then we had reported revenue of $533.317 million versus $533.379 million expected, right? So a very, very, very small, like a minuscule miss, if you want to call this. But overall revenue was growing here. So again, 5 cents versus 5 cents. 533 versus 533. So they pretty much met expectations at this point. And they reported $28 million or 1 cent per share in net income compared to a net loss of $179 million or 9 cents per share same time last year. And that, of course, is on a GAAP basis. And the company also expects third quarter revenue between 553 and 557 million ahead of the consensus of 552. And the midpoint guidance does imply a 16% growth and a sequential acceleration after 3 years of gradual deceleration. So I would say that overall the numbers were really good. $1.1 billion in the first half of 2023, $45 million in net GAAP income, right? That's really important because so far, obviously, the company's profitable on a non-GAAP basis once you make all those adjustments, but they are now profitable on a GAAP basis, and that's where a lot of the institutional excitement is coming from. $14 million in GAAP operating income. We got $285 million in adjusted free cash flow, 27% margin, $260 million operating income here, and 25% operating income margin. So again, numbers are improving here. Operating income up to 10.1 million. You can see how they have increased, their margins, and obviously have turned the corner towards profitability in the last few quarters here. U.S. commercial revenue growth, U.S. government revenue growth, 20 to 10% growth here. Obviously not as crazy because there's fewer and fewer contracts from a government standpoint, especially in the U.S. once you've already worked with the defense sector, once you've already worked with the military, healthcare, data intelligence, like it's all these different organizations. I mean, there's not going to be a lot of contracts churning over every single year. That's why the growth rate is now starting to slow down. But commercial is still the growth engine, right? 20% growth here on a year-over-year basis. And then you look at overall government revenue of 15%, so they can now start to look into targeting other governments around the world. And commercial is up 10%. So growth rates have definitely slowed down a little bit for Palantir, but that's just the nature of the business, right? As I mentioned, as numbers get bigger and bigger, growth rates do start to come down. They closed 66 deals of at least $1 million in second quarter 2023, 30 of which were at least $5 million, 18 of which were at least $10 million. So their dependency on these high big ticket contracts and deals is not really that high because 18 off of those 66 is a very, very reasonable number, right? So that's about 27%. So a third of their deals are over 10 million, and of course a little under half are at least worth 5 million. That obviously 18 includes the 30, right? So about 55% of those deals are less than $5 million, or more than one, less than five, right? So that's kind of like the majority of their cohort. So they're not dependent heavily on these big ticket deals to kind of keep their business going, which is good. $3.1 billion of cash, so little to no debt. The company's never really had any debt because they've done a lot of stock issuances, and as a result, they are pretty much sitting on like the most negative net debt you'll ever see, and little to no debt with about $3.1 billion of cash. That's probably one of the best things about Palantir, is that it's got so much cash on the balance sheet, right? This right here is going to be their guidance. So for the full year, they're expecting $2.2 billion in revenue. And of course, they're raising their adjusted income from operations guidance in excess of $576 million. And they expect GAAP net income in each quarter for the next 2 quarters as well. So I would say strong guidance, very strong numbers coming in, and I think the business is now turning the corner towards profitability. I think Alex Karp's a little bit more cautious and aware of what Wall Street's really looking for. They're still growing, which is good, but their now main focus is achieving a profitability, achieving operating income, achieving free cash flows, positive free cash flows, while also maintaining a certain level of growth for the business, while also having a very strong balance sheet. I do also think, and I believe, and I correct me if I'm wrong, that they did announce buybacks as well. So let me just go over here. There we go. So $1 billion in buyback program, stock rises after earnings. So yes, so I remember seeing something like that. So Palantir announces $1 billion in a buyback, which obviously is just fantastic, because now they're finally starting to buy back their own shares, which is going to help, with the EPS, with the profitability, and of course, not to mention the stock price itself, because $1 billion is a lot of shares for Palantir, especially when it's trading at $18, $19 a share. So again, that's that is going to bring the share count down. That's exactly what we were looking for from a company, 2 years ago. But hey, better late than never. And again, $1 billion in share buybacks. And the move comes as the company posted $285 million in adjusted free cash flow during the first half of the year, and finished the second quarter with $3.1 billion in cash and cash equivalents on the balance sheet. Our cash flow, balance sheet, and authorization of $1 billion buyback show that we believe in the future of this company. That's David Glazer, Chief Financial Officer, and the belief is that AI is a massive opportunity, is what they also mentioned, and the scale of opportunity that lies ahead has increased significantly in recent months, and we intend to capture it. And he noted that the company is in talks with more than 300 additional enterprises about using the Palantir's AI platform, all of which are searching for an effective and secure means of adapting the latest large language models for the use of their international or internal systems and proprietary data. So artificial intelligence is where it's at. Palantir is at the forefront of that wave. That's one of the reasons why, of course, it's performed so well in the recent months. And year to date, obviously, it's up a little bit over 173%. So I think there's a lot more upside, but I think there's going to be, some steady upside, right? We're not going to see like Palantir, rally over 200% in a short period of time, especially when you get the numbers like 38, 40, $50 billion, right? I mean, a company to go from 50 billion to $150 billion, it takes time, right? It's much easier for a company to go from 20 billion to 40 billion, right? Because there's a lot less in market cap, there's a lot less liquidity, there's a lot less involvement from an institutional standpoint. But as the numbers get bigger and bigger, it becomes more and more difficult for companies and the stock prices to actually move. So that being said, resistance is going to stay put at $19. So this right here is going to be that level to watch. Very, very important level for Palantir, all the way up to $26, $29. So those right there are going to be a couple of resistance levels to also watch. And support level is going to be $13.75. That's going to be that support level and that area of demand all the way down to low 10s. So 1032 all the way down to those moving averages are also going to be some support levels to watch for Palantir moving forward. So I hope you guys enjoyed this video. Again, optimistic, and I will consider the dollar cost average at better prices, at better deals. So not at $18, not at $20, but of course, if it does end up selling off, start to see a bit of a pullback and start to see some accelerated drawdowns here, then I will definitely be looking at dollar cost averaging. But in the meantime, just holding what I have, and we'll be looking at maybe selling some calls in the future to take advantage of these rallies as well. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.